So we got three clues here. We got an inside day, we got a price wedge, and of course, we've got your sideways range. Now, how do I use these three clues? Right? I've got my wedge, I've got my sideways range, as well as we are inside that range, which makes it an inside day. So how do we use this? Well, first of all, inside day says, right off the bat, if price rises to the previous high of day, sell the previous high. If price goes above the previous high, well, then I'll buy pullbacks above it. But there's one caveat. I got a wedge overhead. So we knew right away it was going to take a small miracle, especially if volume was low this morning, to push it up through that resistance. So we knew there was a high likelihood because of the inside day, we'd sell the previous high of day. And then again, if there wasn't that wedge overhead, I'd be looking to buy pullbacks above the previous highs. With that wedge, though, we knew there was a high likelihood this would come tumbling right back down in. To the opposite side, of course, if we broke the lows, I'm going to buy the previous low of day. So inside day tells me buy the previous lows, sell the previous highs, trade those breakouts above and below. All right. Whenever we break out of the range from yesterday, it's a big clue. Below the lows, it's bearish. Above the highs, it's bullish. Second clue was the price wedge. How do we use that? The price wedge told me expect fake out breakouts, right? If we go break out, expect price to come back down in. If we go break out, expect price to come back up. If we break down below, we're going to buy those support and bring it back up. So the price wedge tells me beware of those fake out breakouts. Sell the highs of the wedge, buy the lows of the wedge. And also, a price wedge also gives me a distinct personality trait, which I'll use to further give me clues. If I do see price break up or break down, that personality will show through from the wedge. And then last but not least, the sideways range. The sideways range tells me buy the lows, sell the highs, look for the fake out breakouts, and especially when you've got that wedge, right, hanging out above you. All right, so the sideways range, the price wedge, and the inside day, would you say these are all similar clues? Absolutely. These are all clues that tell you fake out breakout, sell the highs, buy the lows. So what happened today? Well, we got pretty much what we planned for. We opened up our morning here relatively slow, made it through our 8:30 news, and of course we found ourselves up to the previous high of day. What am I going to do there first? At first, I'm looking to sell. If it goes through that previous high, I'll then look to buy a pullback, but only if I can get above that resistance, above that wedge. What happened today was it never made it above that previous high of day. The first time it went up, it failed, and we sold it coming back down. It then went up again, and we sold it again. So our first two trades of the day here on gold was right according to our plan, and I want to remind all you members out there to follow that plan, right? Don't look for those hidden trades inside here. Stick to this plan. Now, of course, if you're a guest with us in the room, please be aware I give all my members the exact trading plan to follow. So as a member, you're going to come in, you're going to follow a specific trading plan with me trading with you in our live trade room. It's the best way to learn and earn in a safe and, of course, efficient learning environment. By 8:30, we go through our news. We're up to the previous high of day, two-step pattern short. And again, our plan of attack said specifically, my first job is to look to sell. So I follow my plan. Again, if it would have gone through here, okay, if it would have gone right through it, I could then buy a pullback. Never got that trade, did we? So how do we know to go short? Because that's what my plan of attack told me to do first. We come up, very easy two-step short, double bottom right there, swing low, break below that swing low. We take 26 ticks out of the market at 8:34, right? Perfect example of planning our trades and then trading our plan. Well, then as you can see, we mark up another swing low right there, and this is just a re-entry, another two-step pattern. There you go. So we break below that swing low right here. All of a sudden, look out below. There's your second entry, only about 12 minutes later. We make 34 ticks on that second entry. So remember, previous high of day is overhead. We go up to the previous high. It's resistance first. We sell it following our plan. Now follow me down here. This is my 21 range chart. Here's my 21 range.